Okay, hello traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, May 28th. We're just getting the release of jobless claims here in the US, guys. The number's just printing at this point. I wanted to hit that to you live, but comes in at 2.123 million versus estimated of 2.05. So a little bit higher than estimates on weekly jobless claims. We'll see what impact that has, but good to be with you all this morning. Iman says, welcome back. Hope all is perfect with you. Mr. Fabulous Webinars. Thank you, Iman. Good to see you. Mike, good morning to you as well. Long list today, right? We only have one webinar this week, so I want to get through these all. We'll start off with DXY, Euro, Dollar CAD at support, Kiwi at resistance, gold with a nice little rebound at downtrend resistance. And then peso sitting at support, dollar yen, Aussie dollar, sterling with a nice hold of uptrend support last night, dollar Swiss still in consolidation. We'll circle back to Euro CAD with a downside break that we saw here recently, SPX, and a little update on Aussie Kiwi. Not much going on there, but I know we were looking at it last week. So it's a long list. Any other questions or trade setups you'd like to review? Feel free to throw them on the message board at any point. All right, so here's what the DXY looked like into the start of the week. We were looking at a near-term sort of uptrend support that we were heading into 98.84 or so. Okay, we're still basically there. Here's what the chart looks like on the weekly stance. That crazy March rally, pull back right off the 2016 high close, slope resistance. Ever since then, it's been a series of lower highs, of higher lows, and right now we're testing the end or the bottom of that consolidation range. So, and I said this in yesterday's update, despite all the volatility, a lot of these trades are still in the ranges. They're still at the bottom or top of their consolidations. So for DXY, this is the stance. I wanted to start off with this chart because this is the only chart that matters for the DXY at this point, is what we do into its consolidation. Could we start to see a rebound here? Yeah, that would just be within the consolidation play. But if we do see the downside break, and it's specifically the close, you're looking for possible, drop down towards 97.87, which is the 618 confluence right down here. So it's all about this zone right now. Momentum completely flatlining on a weekly basis. Here's what it looks like on the daily chart. Okay, same consolidation. Whether you use the open low, which is what I was using on the other chart, or whether you use the swing low for the May 1st open, whatever you want to do, you're basically trading into support right now. A 786 retracement, that advance off that March drop is 98.84. We're basically sitting there now. One other note is that despite, again, all the volatility we've seen over the last couple of weeks, here's the monthly opening range. You set a low on the 3rd, or 4th rather. No, it was the 4th, yeah. And we've held that range ever since, right? So even if this breaks, look for that swing low near 98.50s, but you're essentially looking for a deeper drop towards the lows they made in March. That would be upslope support. Somewhere around 98.27 would be your initial target. Everything hinges on whether this holds right here, right now. Here's what it looks like on the intraday chart. It's the same chart that we were looking at to start off the week. There's the weekly open. Again, holiday trade, you get those thin effects that really exacerbate moves and exaggerate the initial drop, which is what you saw here. And we've been ranging ever since, just above the 786 retracement. Okay, so again, the immediate focus is on, like, literally yesterday's range. Okay, the high that we set comes right in line with near-term downslope resistance. So that'd be around 99.35. If we break lower, okay, the risk is 98.27. The risk is 97.84, 97.87. This zone down here. But first things first, I just want to get you again. Don't get hung up. If we do get a dip towards that low for the opening range of the month, it could offer a bump. I don't know, but just be cautious that that's there. Worst case scenario is this thing breaks, goes for a test of the monthly opening range low down here, fakes everyone out, and then reverses. So just be wary of that level. You know, it's not marked on the chart, but um, know that it's there. Know that it's there. Now, if we breach to yesterday's high, okay, or if we breach this slope, it's not necessarily turning bullish, but it could suggest a return to consolidation resistance. So you'd be cautious. Again, weekly open resistance, 2019 high, 9967, 9970 zone would be where you look for the first sort of resistance zone, but it all hinges on a break of this immediate zone right here, okay? We're at the bottom of a consolidation range. Nothing more, nothing less. If we break below, you'd expect to see an accelerated move. You'd expect to see that cascade effect. If this holds today, you know, the pop above downslope resistance could see a little bit more of a rebound towards the consolidation zone. So DXY towards the bottom of that consolidation. Here's what Euro looks like. Start off on the weekly chart there as well. We saw that that held a key support zone at 107.77. We talked about that zone for a while. 109.76 into 109.86. That 10 pip zone is what we've been focused on for the last 6 weeks. Here's the first attempt, okay, back in April. Here's the second attempt. Here's a third attempt last week. We closed well below. Here's another attempt. Now, this is the weekly chart, so nothing really takes hold until we get the close. All things held constant, though, you are breaking a pretty significant lateral resistance zone at these levels. So on the weekly chart, you want to see this thing stance above 109.76 into the close of the week, okay? I think there was, okay, let's jump into the daily chart. Here's the daily chart, 109.86. Again, the basic 618 retracement that dropped from that late high that we made in March. Again, here's resistance. Here's resistance to the start of the month. Here's resistance again. Yesterday, we closed above it, but here's the monthly opening range highs at 110.20. Again, very precarious, right? All things held constant, you'd want to see this thing plow right through into 110.50s, 110.59, right? It's 100% extension off the low, even if it's two equal legs. It's a 786 retracement off the high. Nice lateral level of pivots going all the way back to last year. Good zone. But here we are. Momentum's knocking the door at 60. Price is struggling at the monthly opening range highs. You'd want to see acceleration. Now, it's no surprise. Again, you look at the DXY, you know, that's at support. Euro, yeah, that's at resistance. Look for a definitive move here today. Here's Euro on the intraday. Okay, 110.20 was the first sort of upside target on the advance right here, 110.19. It's the objective May highs. Again, we hit it yesterday. Here we are again. Slope's holding now. We're still pivoting right along that level. So look, near-term support 109.86, the bottom end of that zone on the weekly chart that we're looking at there. Near-term bullish inval at this point, we're going to bring up to the May open. Okay, so basically, if we break back below the May open, you're looking at a break of uptrend support. You're looking for a possible deeper correction back towards 109. You know, it opens up a near-term short bias. That said, if you're holding longs, guys, I'd be fading some out here. If we break higher, 110.57 is still going to be a key zone. Slope, 786 retracement. Again, it's all loaded there. 100% extension, nice zone. Okay, if you get that there, again, another region I'd be a little bit cautious of seeing some topside exhaustion, maybe a pullback off that level. The broader picture is higher. We like Euro higher, broadly speaking, but the advance is on its fourth day today. If we close in the black, you're seeing divergence all along different charts. Momentum at daily at 60, momentum on the intraday with a series of divergent highs. So just be wary. Okay, the top side's getting a little tired. If it pulls back, great. 109.50, I want to see that hold. I want to see exhaustion ahead of that, and we're off to the races. But it's all about, again, whether we hold this top side slope or not. Questions on Euro? No change to any of those levels from earlier in the week. Okay. That's number 2. Dollar CAD. Great move there, sitting at support. Okay, sitting at support. Here's dollar CAD. Let me take a step back here. Here's dollar CAD on the weekly chart. Not really crazy, crazy zone, but certainly a zone that we've been watching for a while. There's that red dot right on target. 618 extension off the high gives you 137.63. 50% retracement of the yearly range. Objective zone gives you 38.12. We're trading there right now. Weekly close here matters. If we close below, keeps the focus on 36. If this fails here, okay, and it chokes the week above this zone, yeah, you're probably in for a little bit of a recovery. Look for a test of former upslope support turned resistance. That could take you back towards like 39.60s. But it's all about this zone right here. You're seeing the same sort of picture emerge on all of these dollar crosses. We're at a near-term pivot in price. Here's dollar CAD on the daily chart. Nice descending channel we've been holding since that late March high. Nothing changed last month. Tried to push through into the start of this month. Outside daily reversal called the monthly high. And here's a break of the monthly opening range lows on the 26th. Keeps the focus lower while below the objective monthly open, which is still 139.45. That's also the low day close from last month. And it converges on slope. That's your bearish inval. Here's where we closed yesterday, just a hair below this 618 extension from the decline off the highs. That's 37.63. Here we are straddling that zone. Again, what do you do at this level? You want to press a short at the lows, or do you want to try to fight the decline? You can't do either of those. So if you're not already short, there's not much for you here. Would I play a rebound? No. I answered that question right up front. I personally wouldn't. It could rebound. Here's what the intraday chart. I'll give you the argument for it. I'm just not a big fan of it at this point. We've been waiting for this dollar CAD breakdown forever. The fact that we're finally getting it, I want to see this thing push through. But there's some doubts. Okay, here's the intraday chart, and here's what it looked like into the open of the week after the holiday weekend. Net 618 extension at 37.63, still holding. If you go to the previous updates, guys, we were working with a slightly different slope, I believe, but there was that padded region right there, 37.93 into 38.12. This is from the 21st, right? 38.12 right here, 37.93 right here. We broke below, I guess that's still resistance. It converges on slope today. So like if we break through there, sure, look for a possible recovery, bearish inval 39.45. All things held constant, it's really the onus on a break below 37.08 to get the resumptive move down lower towards 36. So it's one of those moves again where you could see it drift, you could see it tempt, look like a break. It's coming in support. It's already shown some divergence into it. Don't get faked out. We need to see that conviction push below 37 to get this thing going to the next leg lower. So that's my hesitation on dollar CAD. I think it was a great trade. 38 if you took profit, you're great. 37.90 if you took profit, you're on point. 37.60s if you haven't taken profit yet. It's buckling here. So it could, if you want to leave a little on the table, that's fine, but do something down here. Do something down here. Downside break beyond here, I'm looking for 36.10. It's a 100 pip drop. Okay, you do have some slope to look ahead of that point, 36.50s at this point, but depending on where you are in time, that could even converge all down here a little bit later. So it's another trade that is at the near-term trend extremes, but on the daily chart, still leaves a little bit more room. And again, remember the basic conceptual, ideas that we talk about when we're talking about opening ranges and whatnot. Here's a break of the opening range, and you saw the accelerated move. All things held constant, that would suggest a late month low. There's only a couple days left in the month. All right, it'd be pitiful if this ended up being the low and it just rips from here, but you get the picture. Like the sustained push into a late month low, it's clean. It's clean. It's just that you're at near-term support here. So maybe worth shelving this a little bit, let this little near-term consolidation zone break, kind of clear the way. At the end of the day, a break below 37 is really what you need to see the next leg lower here in dollar CAD. That's number 3. Here's number 4, going along with some of the commodities here. We'll hit Aussie in a little bit later too, but here's Kiwi. Let me hit you on the weekly chart real quick. Here's what Kiwi looked like back on the 26th. We're heading into near-term resistance. The first thing I just wanted to kind of note. Here's what the weekly chart looked like. Kind of looks unchanged, essentially. That basic 2000 trend line, long-term trend line, that was the break that we saw here in March. That's the pivot that we're testing now as resistance. It also happens to be downslope resistance for this slope. It's the 618 of this pitchfork off the late highs from last year and this year. So near-term resistance, momentum at 50, the definition of resistance, right? If we get a pop through, momentum push through 50, you're looking for 63.13. But right now, you're testing resistance. And not just any resistance, it's a confluence resistance, meaning upslope resistance from 2000 and current operative downslope resistance. Pay attention here. Here's Kiwi on the daily chart. 2015 low, 61.96, the swing low that you made back here in October of last year. There's that 618 extent parallel. We're just looking at on the weekly chart. Near-term upslope support from April and this month's low. Take a parallel off that, extended off the late April high. You're there as well. Now, my problem here with Kiwi is that it's very similar to dollar CAD, and that you could see this extended push towards 62.64. That's the 618 of the yearly range. So don't get faked out. If it punches through here, you could see a tag of this, then a failure. It's kind of the game that the markets have been playing lately, is all these failure choke points. But that's the real region you need to breach to unleash the next leg. So anything in here could be noise. Again, I'm very cautious for the long side. Although the broader picture, I do like it higher. Near term, Kiwi's at resistance. Here's what it looks like on the intraday chart. That high that we wrote about into the open of the week is still holding. There it is. We pushed into another high yesterday, but it was on building divergence, strong divergence signal. And here's the washout lower. The May range high, 61.55, held perfect support. And here's the bounce. Look, again, it could, push and punch into that 62, 64 region. I still be cautious, guys. I do like it higher. It's in an upslope. You know what I mean? It is technically a break of the objective May opening range highs. So subjectively, or objectively, I should say, that would keep our focus for that late month stretch. This doesn't look so good, right? Next upside target, 62, 64. If you break back below that slope, I just kind of scratched this one. You're opening up the weekly open, you're opening up a swing into 60, 75, 60, 90s. Wouldn't want to sit in a long in that scenario. So that's Kiwi. Questions on Kiwi? Still liking the long side, but you're running into trouble here. So watch for exhaustion out of 62.64. That's number 4, Kiwi dollar. Gold, going right down that update. Here's what gold looked like again back into the start of the week. We saw that break early in the week that took us lower. The 100% extension at 17.14 was the level that we were looking at. Key support was just below the channel right here. Okay, here's what gold looks like now. We literally turned cents ahead of it. Look at that. Look at that. Okay, we turned just ahead of that key support at 1690, 1691, the 1618 extension, the swing low that you made from back there in May. you had slope support there, you had a whole bundle of joy there. We turned just ahead, right? We turned at 1693. And here's the rebound testing near-term downtrend resistance or channel resistance, whatever you want to call it. Ideal scenario, this chokes right here, okay? But the breadth of the reversal, the strength of the rally, the move from 1690s into 1720s is not to be ignored, I think. So again, it's one of those trades where you're right slap in the middle of the weekly range now. You're not near resistance, you're not near support from the weekly range standpoint. So it puts you kind of at a disadvantage. If you played the rebound and you're in a long position, I'm out here, okay? If you're looking for a short position, this is where I think you could get faked out. I'd be very cautious. It's either going to be a test of key resist. Let me take a step back. Remember, key resistance that we've been talking about, like 1733 in gold, still stands. Okay, there it is. We did close a week above it, but we held right into slope resistance, right? Bring this to a close, and it doesn't get any clearer than that. On top of that, there's some divergence in momentum, which we've been talking about for quite some time. Do you think gold finds support at 1693 and now is continuing? Amen. So look, let me go back to that chart. So here's the daily. S 1733 is still my resistance zone. That's still the 786 retracement. Okay, that's also just above, and I didn't put this on purpose because I didn't want to clutter the chart, but here's your new yearly high day close, 1731. You know what I mean? So I don't want to judge this based on the support. Right now, the focus on the resistance, on this recovery. You basically want to see each failure ahead of that level on the daily chart objectively if there's more downside to go. Okay, a hold at the high day close for the year would sort of be phenomenal, and then a move lower if there's more juice on the downside. Here's the near-term chart that you pay attention to, and the immediate focus is if this thing breaks, forget 1693 at this point. If this thing breaks, man, we're looking for a possible recovery right back into this zone. There's a whole litter of stuff here. Here's 1732, that same zone we just talked about, the long term. The weekly open objectively, and the weekly opening range highs is 1735, and then a 618, this whole drop is 1737. So for the downside to work, okay, if gold is heading lower, it's failure either here, like right now, or here. Anything above 1737, you're looking for resumption. That's my humble opinion. Eman, does that help? A lot of these trades coming into some very tricky territory here. To the max. Thanks, Mike. You're more than welcome. Yeah, it's very, very treacherous here. But on the near-term scope, that's why you try to break it down as simple as possible. On the near-term scope, what just happened? We just came off of upslope support, just ahead of a major, lateral level we're looking at. So if we're coming off of upslope support, if we breach near-term downslope resistance, then yeah, you're basically looking for a rally towards upslope resistance, which again converges on this whole zone. So gold is not out of the woods on either side, in my opinion. Time to wait a little. Thank you, says Eman. Yeah, I think so. I think so. All right. That's 1, 2, 3, 4, 5. Number 6. Let's circle back to last night's update. Dollar yen. Oh, I'm sorry. Peso. Last one on this update. Almost missed it. This thing, here's what it'll look like into the start of the week. This thing has been a magnificent trade. Here's what it'll look like back on the 21st of the month as we were breaking near-term downslope support. We had a nice consolidation zone that we were looking at, shifted the focus lower. This thing plummeted. Again, here's what it'll look like into the start of the week. The main focus was on this 50% retracement, 22, let's just call it 1500, right? That 50% retracement. We're still there. We're still sitting right there. Quick recap of where we are in the peso. Here's dollar peso on the weekly chart. Okay, what a reversal, what a level, what a chop fest. You know, everyone kind of wanted to still jump on the rally despite this thing had made a ridiculous stretch to all-time highs. Here's a pitchfork that we were following, the 200% extension of that range compression that we were in from that advance off the low from 2017 took you into 25.5466. Once we made that initial high, we started to mark that level. It failed again. Support that we were talking about for the last basically 4.5 weeks. It's the high week close at 23.3375 right here. Here's the break last week. Beautiful, magnificent. First level 22.7811. We closed just below that, kept the focus lower. This week we even tapped it as resistance real quick before hitting the next major downside target, which is right now. 22.0376 into 15.03. This zone, critical. 50% retracement. Objective 2017 swing high. Median line. All right here. Curb your appetite for the short side of dollar peso. Okay, we're at support. Plain and simple. Here's what the daily chart looks like. Different rendition here. Pitchfork off the highs. A little bit of a, poetic license here. Kind of, you need to tweak this a little bit to make it match up, but man, it's still pretty clean to me. Median line break saw acceleration. Here's the 25% parallel, which was support back here. Converges on the 50% retracement. Again, 22.1503. That's been support for the last 3 days. Peso on the intraday looks like this. So levels remain unchanged, okay? The whole thing here is if you get the break, if this buckles lower, it should be a pretty accelerated drop again towards 21, 29, 41. That's the objective 618 of the advance. Also converges on downslope support or pitchfork support, basically into the close of the month, into the close of the week. Here's your weekly open. Here's what happened since the start of the week. It's been just last couple of days have been kind of a wash, just ranging above support. Near term, if you break this real tight channel, you know I don't like these real tight channels, but if you do, 22, again, 78.11 is what you want to see. That's the max you want to see on the advance if there's more on this stretch, okay? If we breach that, not only is it that 100 that we were looking at on the longer time frame charts, but it's also the objective weekly opening range highs. So objectively, if you get through this zone, you're breaking fresh weekly highs, probably in for a larger correction in that point. But I can't stress this enough. This is a big support zone. Look for a reaction here. Look for a reaction here. Questions on peso? The popular peso. All right, now let's circle back and hit last night's update, starting with the abomination, dollar yen. Here's what it looked like last night. Setting a pretty clean weekly opening range. The upslope kind of looked like it broke, but it kind of didn't, and we've just been sitting in the weekly opening range. So a lot of the things I wrote about last night, they've kind of just been waiters. You kind of need to sit there and look for the range breaks to give you some validation. No change to any of those levels. The weekly opening range is very tighty. I don't want you to stress this upslope, although we kind of technically still are in it, but stress a weekly opening range break. More importantly, the resistance zone popped through 108.08 is what we need to get resumption. Next upside target's 108.15 to 108.60s, really big zone. Objective yearly open, 100% off the low, 786 off the high, nice zone. The weekly opening range low, if we break that, keep your eye on 107.28. A 38.2 break would clear those few days lows, and that would open up the monthly open and beyond. It's the abomination. Not willing to press this one until we get this clearance. We need clearance. Here's what it looks like on the daily chart. We already tagged that 618 right here. Ever since then, it's like, okay, well, now what? Let's see this range break. Dollar yen on the weekly chart, just to give you perspective again where we are in the longer term. Like, there's not much. There's not much. So we wait. We wait on dollar yen. Questions, comments, concerns there. Number 7. All right. Here's the interesting stuff. Aussie. So I kind of wanted to caution you guys on this earlier in the week. As soon as we saw Aussie with that rip higher, man, it came into a beautiful level. 66.60. That was the last target that we talked about, last week into the close. That is defined by the 2008 low week close. Nice pivot in price. Just above that, you have the 100% extension, 66.87. That's exactly what caught the highs. Okay, here's Aussie on the daily chart. Well, let me take it even back further. Here's Aussie on the weekly chart. Okay, 2008 low week close, all the way back here. Swing lows from back here in 2019, all the way back here, 66.60. What is the exact level? 66.70, 10 pip zone right here. So we're at resistance. Yeah, we broke downtrend resistance a couple of times, but now you're heading up on basic lateral resistance. What do you do? Momentum's right at, not even at 60, it's still at 50. What do you do? Well, if you're long, you start to tone down a little bit. If you're looking for fresh opportunities, you might look for some exhaustion here, but you're fighting an uptrend. If you get the breakout, you're probably going to see this thing rip. Here's the daily chart. Again, there's that confluence zone. What do you do? Momentum. Technically, it's divergence, but it's not the cleanest, right? You're seeing that bump high from last month. Price action is making a higher high. The oscillator is making an equal high. So in my humble opinion, the immediate Aussie advance below 66.87 is at risk for some exhaustion. We like it higher, broader picture, but below 66.88, 66.87, I think you can see some exhaustion. Now, if I'm wrong and that plows right through, we're right onto the upslope. Okay, the convergence of the broader upslopes takes you down to like 67.80s, or up in 67.80s rather, into the start of June. But right now, this is my focus on Aussie, on what happens into this resistance zone. Here's what it looks like on the intraday. So even on this intraday, it's a little bit different of a slope, okay, just using these lows. You have 1 touch, 2 touch, 3 touch, 4th touch, parallel off that extending from the April high right up here. It looks like some false breaks on the upside, but you get the picture. What would confirm or validate in my mind the breakout continuation higher in Aussie? It's that 2019 low day close at 67.06. If we get through that, right on point. Look for resumption. Till we do, still think there's a risk of some exhaustion here, if not some more lateral crunch to the side, as we've been getting on all these other setups where this thing consolidates for another 4 days. But look at this resistance. Watch for reaction up here. Questions on Aussie? All right, we are plowing through these. Sterling, number 9. So Sterling with a ridiculous hold last night, really clean. It's all about this move right here. And that's what we wanted to highlight. So basically, if Sterling is going to hold, we need to hold basically right here or above weekly open support, which is 2170, right? 618 of the advance was 2186. We turned right at 22. Okay, so what does that mean? Doesn't give us clearance yet, but certainly you're still holding this near-term upslope. So look, don't even look for a drop into this zone if we pull back. Anything below this at this point, you kind of want to drop anything below 2215 if it doesn't hold. But, we need to see 2360 break. Ideal scenario, again, is 2427. That's the 618 of the drop, slope resistance. would be it'd be sick if we can get into the zone by the start of next week. All right, but all things held constant, it's make or break. We're right here. We're right here. That support bounce yesterday literally held. Here's a little bit of an upslope, or a little bit of an upswing rather. We need to hold these lows if Sterling's got more play in it. Remember, again, for a pound, it's been fake out central. We had that consolidation zone. This break looked like it had a much larger decline in it, but it held. Okay, and if you take, again, this is the daily chart. If you take the same slope that we've been in from those highs, this is all the way back to the 2018 highs and last year's high. If you take that same slope, right, you start to connect those lows, you start to think to yourself, well, maybe this wasn't a consolidation break, and rather this was just a bounce off of the same downslope support, in which case you'd still be looking for a breach through 2420s, 2430s. So tricky. Again, you take a step back, right? You try to get as objective as possible. We're right slap in the middle of the whole monthly range. So you don't have a clear-cut conviction that you're tilted towards one side or the other. This is former consolidation. Remember, we were looking for that consolidation break. If this break is legit, here's the test of resistance, which is why, again, we need to see this hold of the lows and a plow higher to get this thing going. And again, for the near-term chart, just look at this near-term channel as long as you're in it. We're looking for that push towards 24. Questions on pound? Number 9. All right, number 10, Swissy. Not much to update on there, save to say look for the consolidation because the longer it coils, the better the break. And this thing's been going for a while. Here's Swissy as it stood last night. Kind of just wanted to highlight that we were still in this really clean consolidation range. The consolidation range is now coiling within the weekly opening range. So, man, this thing's going to pop, and when it does, we'll get more definitive near-term bias. At this point, sort of the ideal scenario is we would like to see a downside break, but we'll take whatever clearance we get. At the end of the day, if we do see a downside break, look for 96.71, or excuse me, 96.17. A little dyslexic this morning. That break to sort of open up a much larger decline. Okay, it's a 6.8, the advance off the lows they made back in that March drop, or March-April drop, right? So yeah, I mean, it's a pretty clear-cut trade until we get out of this consolidation zone. Look for this break. I literally have nothing else to say on this. Questions on Swissy? All right, now some of the ancillary exotics that we've been following, or that I got some questions on last week, EuroCAD, man, the upside failed miserably. So we were way wrong on that. Remember, we were playing here that the euro strength was kind of outpace CAD strength because CAD wasn't doing jack. It was just sitting there in that range forever, really frustrating. So we said, you know what, maybe we could play CAD weakness or euro strength rather through EuroCAD. The topside breach looked legit for a while, but man, divergence into the highs failed miserably into the close of last week. And then we broke up slope support. So the levels for EuroCAD, here's what it looked like last week. There was that resistance pop, false break. Once we broke that swing low, there's been a sell-off since the break below 151.65. Even took out 150.85, and that's that tap that we saw yesterday. Here's the rebound. At this point, you're bearish below 52.40, which is the objective weekly open. A break below this looks for that downside tag of the 100% extension at 150.18. The only thing I'm weary of here is that, man, the monthly opening range couldn't have been messier. Here's your monthly open. You pop higher, you pop into a low on the 11th, and ever since then, you haven't even done jack. You haven't tested the monthly range highs. This technically was a test of the monthly range lows and a defense. So I do think you can get a little bit up more upswing here. Don't get faked out. You're still bearish below the weekly open. Questions on EuroCAD? All right. I see my Pete's in the room here. SPX, guys, what a breakout. Once the level broke that we were talking about for oh so long, it was pretty clear cut and dry, 29.32 to 28.90. Remember this whole zone of resistance, even that clear false break that we made back in April. Perfect hold on this last approach in early May. Here was the break. We even tested as support, tested as support, tested as support, and here's the next stretch higher. Next lateral level, look for 30.69, just a bit higher from where we are right now. Here's SPX on the intraday. Okay. And here was the last update here on SB from the 19th. Okay. There was that tag of resistance. We pulled back. That same zone held a support, right? We trickled below it twice, but on a closed basis was perfect support. Here's the 100% extension. Here's 30.26 resistance, pullback, straddle. The slope held as resistance, and here we are riding this pitchfork, which is newly added, right? Here's the new one. This is from the April 24th low and the low that we made back in May. Excuse me, back on May 14th. So it's precarious again. It's constructive above 29.27. Bullish invalidation for the broader uptrend here in SPX is down at 28.90 down here. Now that's going to choke up with time. So into the start of next month, we'll choke up that bullish inval towards 29.32. Again, the same resistance zone we were looking for all throughout that rally. Will converge on slope, but right now I'd be more comfortable keeping it down at the May open. Near-term lateral resistance 30.69. If you see a break there, you're looking for 31.37. But boy, oh boy, what a move. Questions on SPX? Okay, just a quick note on Aussie Key. It's not something I've been actively involved in, but here's what the chart looked like from last week. Look, we called the high, and that worked out to be a really nice short. What we do from here is sort of my issue. Here's what Aussie Kiwi looked like back on the 18th. We were heading into a major resistance zone. It's clear as day, 107.92 into 108.33, 2019 high day close, 618 retracement, slope resistance, my favorite confluence zones. Really nice, right? First day we saw hesitation. Second day we caused a mini sort of reversal candle in there. And that's when we said, hey, let's look for the reversal here. Nice divergence on a third reference point, really nice upslope resistance, lateral level, former swing highs, you name it. A million reasons to look for resistance. The first key level of support would be 107.15, the objective high day close from the previous month, converged on slope. So it looked beautiful into this drop. Even the secondary and third days, you start to look like it was dropping even lower, look like you're going to see an accelerated drop and a break below uptrend support. And then you got that jackknife action, and the last couple of days have been sort of precarious, right? The lows have been stretching right off every time you spike into it. So it's straddling that April high day close at 107.15 right here. Here's what the intraday chart looked like. Got a couple slopes that we were looking at. Wanted to see that 107.15 level break to give us the accelerated drop, the validation of a break of uptrend support. You got that break, but we were now straddling it. We're now straddling it. Here's what it looks like on the intraday. There's that slope. There's the break. Not the cleanest. But here's 107.22 and here's 107.15. We're just, what do you do with that? Now I've added this near-term downslope, which may be giving some guidance to the decline. This is the 618 parallel, by the way, of the pitchfork. Don't get fooled. Or just for clarity, rather, I shouldn't say don't get fooled. But again, it highlights sort of the same zone of resistance right here, guys. 107.16 to 107.22. It's the 618, 618. Well, I say that twice because it's the 618 retracement and it's the 618 slope right here. If this holds resistance on this recovery, then yeah, I think you risk another move into the monthly open. If this doesn't hold, like I don't know, if 107.50 breaks, yeah, I'd be bullish technically, but there's upslope resistance just higher. I mean, there's a 30 pip range you could try to play, but it's not really the most profitable risk reward ratio. So listen, I don't know what to do on this Aussie Kiwi. I just wanted to bring it up because I know we were following it, and the decline last week was beautiful, but the initial level of support that we were targeting after it broke was sort of like a magnet. We're snapping back to it every time. So until we get some definitive price action and a weekly range break, something that takes us further away from this 107.20 point, I'd just be a little bit more cautious. All right. Any questions on Aussie Kiwi? Look, guys, a lot of these trades kind of have a little bit of a hangover from that initial move that we saw earlier in the week. So sit tight, wait for the positions to come to you and for our entries, and still stay nimble. You know, we're heading into the close of the month. Okay, the last full days of trade for tomorrow. Again, you get those end of month flows. It's been a shortened holiday week. I know here in New York, at least. Well, not to say that it's a light craft to begin with, but um, just stay nimble into the close of the week. If time, general thoughts on Euro Pound. Aurelian, let's take a look at Euro Pound. I'm not really a fan of it. I guess that's an understatement. I hate it, but let's take a look. I take any and all questions, brother. Let me take a see what's going on here. Yeah, I used to call this the grandpa trade because it would fall into, I mean, no offense to any grandpas out there, but it would fall into a range. And I remember all through these 2017, and this thing was like slaughter. Not slaughter in the fact that you were losing money or anything, but just nothing. You're sitting there trying to force a move for like a 15 pip range. Um, here's your yearly open. Let me see this on the weekly chart real quick. Ugh, hideous, hideous Aurelian. Um, man, I need to do a whole rework of this. I'm usually pretty decent with being able to come up on the fly, but I don't even know where to start with this thing. It is just. So here's your monthly open. Looked like an monthly opening range back on the 13th or the 12th there. Stretch into 2016 high day close. Let's see if any retracements have been fulfilled here. It's got 38 too, probably. There it goes. Yeah. Aurelian, you're at resistance. That's all I'll say. You're at near-term resistance. 38.2 retracement. Again, that 2016 high day close. I mean, messy as it was, last couple of attempts have been either major reversals, break and accelerations, or again, major rebounds. So a low tolerance area for price. Again, if you put a gun to my head, I'd tell you to watch out for resistance here. He says, no problem, thanks. And no worries, man. I just, I'm always willing to take any challenges. Sterling Swiss is always, can you check on the ugly one for me? Yeah, Mike, Sterling Swiss. I don't have a chart on that, but we can always bring that up. Is that a 50? Right on. All right. So it is then Sterling Swiss. Hmm. Interesting. Here's what I'd be looking at with Euro Swiss. I'm sorry. Michael says not ugly. What? Now I'm telling you just before we even start, this is completely objective price action study. I don't know anything about um, the event risk docket of Swissy or what's going on with any economic releases. But here's what looks to me like it's happening on the near term chart. So you're playing a rebound off a 38.2 retracement from the broader advance off the lows you made back in March. Cool. The downslope or the decline has taken the shape of this pitchfork ever since the high. Seems to be holding pretty decent. Let me just adjust that a little bit. And you came off of the lower 25% parallel. Cool. The area of resistance where it turned from was beautiful because you're looking at this 119.67, 119.79, 50% retracement from the decline, 100% off the low. Cool. That puts the immediate focus on this break right here. All right. So support, resistance, breakout price. I mean, honestly, this should be like more from a timing standpoint here, but you get the picture. Essentially need a 2020 break, 2023, to validate, in my humble opinion, a complete breakout and a reversal and a move higher here in pound Swiss. Till you do, you have responded to and reversed off of downslope resistance. Okay, that's all I'll say on that. But some food for thought there. Feel free to take some snapshot of this, Mike, for future reference if you want to take a look at this later. But that's my quick 2 cents worth on pound Swiss. Does that help? Will do. Thanks. Right on. All right. And that's everything on my end. 10, 11, 12, 13. All right. Well, we'll go ahead and wrap things up here, guys. Want to wish you an awesome weekend. Stay nimble. Again, to close the month, it's not worth it. If you're not in a position, it's actually a good time to kind of take the rest of the weekend off and just enjoy. If you are holding positions, lighten the load and get your protective stops, in order before you head into the close of. I wouldn't even do it before close of today's trade because again, Friday end of the month flows can start to get a little bit hairy. I'll give you an update later tonight on the SB intraday update. Have a great weekend, and I will see you on Monday for the free session on Daily FX, and then right here back on SB Tuesday and Thursday. Have a great time, guys. Good luck trading. Cheers.